All right, guys. How's everybody's weekend?
Very good.
Cool, cool. I'm gonna open the chat box. If you guys have questions, you can ask in the chat box. And
I'll try to answer.
yeah, if you want to ask a question, you can raise your hand or whatever in the little button, and you can ask your question live if you want, or just ask in the chat box. Today we're gonna go over something called the Cascade. It's basically the 4D schematics along with momentum boxes, which is just basically hours where there's going to be some form of manipulation. And Ivan will be going over the momentum boxes and partly on the timings, and then I'll be going over the schematics and the timings and how to apply the schematics. Now, the schematics that we teach are going to be more of a confluence than the setup. Okay, so it's confluence than setup. So after today's session and tomorrow's session, so tomorrow's session is going to be about the setup models and blending everything together because you need each piece to make it work. Then you'll understand how we take trades. So when you're looking at this, just know that this is more about timings, schematics, the way the market plays out. Basically, it's going to be more like bearish moves hidden inside bullish moves and bullish moves hidden inside bearish moves. Okay. So yeah, let's begin. So let's talk about bullish cascades. There's four types of cascades, which we're going to go over. So basically, a bullish cascade type 1 is a bearish move hidden inside a bullish move. Okay, so we want to see the market on a higher time frame. This is obviously intraday. On the higher time frames, we want to see bullishness, right? We want to see higher highs, higher lows. But on the lower time frames, so if you've ever asked yourself, like, the market's bullish, but on the lower time frames it's bearish, and I keep taking sells and keep getting screwed over, it's because it's designed that way, right? So it's going to look like the market is trending bearishly, when in actuality it's actually a bullish move. Okay, so let's look at what we have here. We have an Asian range, right? So we have Asian range inside this purple box here, and we can see the Asian low and the Asian highs. It's really nice if the Asian range leaves equal highs up here, some sort of liquidity pull up here. And we get a move down into London. Sorry, can't see my mouse. So here's the purple box, the lows, the highs, equal highs, right? So we see the low of Asian. We get some Frankfurt pulled back into London, taking out the Asian low. And then from London, we get another pullback into the New York low. So the easiest way to look at this is a stop hunt of the Asian range, a stop hunt of the London low, and then a stop hunt of the London low into the New York into a POI. Okay. Let me admit this person. So the POI, we don't use like order blocks or anything like that. We used to, but now we don't. So it's a different type of POI that you guys will learn tomorrow. So hold on one second. I gotta let somebody in.
Fucking hell. Lost it, man.
Okay. So sorry, it's just for some reason it's lagging on letting people in. Make sure everybody's in here. Okay, cool. Post this in the army just in case. All right, let's continue. So we have, yeah, so here we have the bullish type 1 cascade. So yeah, it's just basically a stop hunt of all these session lows into a POI during New York, and you're going to be targeting the Asian highs. okay? So if we look at the details here, it's a higher probability if Asian highs create equal highs. Pay attention to the inducements. Okay, so we need to, so if we're targeting the Asian highs, right, we need these to stay intact. Like each high needs to stay intact for that New York session. Okay, that will make it a more higher probability because, let me use my annotations. Where's my annotations?
Fucking hell, cunt.
Okay, so we have the low into New York, and we want to see some valid like liquidity up here, like a trend. Okay, now you can sell these trend lines, right? Like trend lines work, you can sell them, but they have to have the, you have to have the, what's the word I'm looking for? It has to be logical, right? You have to have the logical sense of like why you can sell. And this is how you would ping pong the market, right? You have to be aware of multiple things. And this is why I don't recommend, doing ping ponging unless you have a complete awareness of a lot of situations happening at one time. Okay, you don't need to ping pong to make a lot of money. Okay, just saying that. Again, anybody who just joined, new students can ask questions. Old students, please refrain from asking questions. Just ask them in the group because I need to focus on the new students. Okay, let's move along. Okay. Okay, so here we have a bullish type 2. It's basically Asian range. And then we get, let me clear this out. So we have the Asian range. And in this scenario, we get a stop hunt of the Asian range high first. And then we get a stop hunt of the Asian range low. Typically, it's going to run to some sort of POI. It's going to almost hit a POI in London, which becomes this inducement, right? So the London low will be induced. We'll get a retracement back down into New York, into this POI to the left, okay? Jesus Christ, people are still late. Hold on. Okay, so we see that we have that London low, right? So this is basically an inducement for the New York POI. Okay, so if you see a POI below this London low and it missed it, just know that that's most likely going to be induced for that New York pullback rally. And then we also have a trend line, right? So the trend line is done typically if we get 1, 2, 3 taps. Typically the trend line is going to be done, and we can consider that basically a liquidity pool because we have cells all up in there that need to be cleared out. It doesn't have to happen every time, but it's most likely going to happen, especially if we're bearish and we're in a bullish scenario. And then we have this bearish move to trade back down into this POI to expand to the top. Now you can still, like I said, ping pong this, but it's not recommended. Okay. It's better to see Asian highs and lows wicked out with no candle closure above or below. Look for clean order flow. Look for clean order flow on the decline into New York. If you don't know what clean order flow is, it's just everything here is just mitigating. There's no gaps in the price, okay? And it's just, you know, mitigation on mitigation on mitigation down, and we clear the mitigation. Okay, moving along. Oops, that's type 4. One second, guys. Okay. Bullish type 3, it's the opposite of bullish type 2. It's just when the London low gets taken first, the Asian low gets taken first, and then the Asian high, and then we get a retracement back down into New York. This becomes induced, and this becomes another liquidity pool, right? So we're targeting, so we're going 1, 2, 3 into New York, and then targeting this high up here, this London high. Okay, so it's the same thing, it's just one side gets taken first opposed to the other side. Okay, bullish type 4 is a London close type of play. So typically what you're gonna see is you're gonna see during the New York session, you're gonna see like a drop and then this base and then this rally, right? So you're gonna see this rally at the closure of New York, which ties into the type 1 schematic, right? Because the type 1 is going to be this bullish move, at the New York, between New York and London close. Typically this move is gonna happen more towards the London close session. So during that London close, we're gonna see this move, probably about 20, 30 pips up, and then we're gonna see the consolidation until Asian range. Asian range is gonna dip back down into that New York low POI, okay? When we see that, you can take a buy in Asian session for a continuation, right? So after this, you get possibly a bearish type 1 schematic, right? Where all the highs are being taken, swept into the previous day's high, and then a retracement back down, okay? So just be aware of that. This has 2 variations where we can also have the London session. If this stays in like a consolidation without tapping into this previous day's New York low, we can have a variation where the London session will tap into that previous day's New York low POI, okay? And then into that previous day's high. So our target would be whatever setup, the opposing setup on this side. So if we have, for example, a QM model or one of our sell setups on the opposing end, that would be our target. Or you can just target above Asian range high or the previous day's high POI. Okay, let's move this to the side here. Okay, POI is created at previous days New York to London close. CBDR, if you don't know what that is, it's just basically the time after London close until the Asian range is open. It's basically a very tight range. It's just building liquidity. Asian range trades back down into the New York POI from the previous day. You can target the previous day's high POI. Okay. Bearish cascades, I'm gonna go through this one quickly because it's literally the opposite of the bullish ones. So bearish cascade, we have the Asian range consolidation, equal lows created below, a run into London, a run into New York, into a POI from the previous day, okay? So it's just the opposing side of it. So basically we have, it's like a stair step or a cascade is, oops. How do I go forward? Okay, so we have here, here, into New York, okay? So just think of it as a cascade going up, boom, 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 into a POI from the previous days, and then you're targeting the Asian range liquidity, okay? This is the bearish type 2, okay? So we have that low of Asia being targeted first, then the high, then a pullback, then a rally into New York, taking out whatever liquidity is below here, whatever trend line is being formed here, we can take that out, targeting this low that was made in London, okay? We have to think of each one of these sessions. Each one of these sessions is somebody's day, okay? So for example, this Asian range, that you're gonna have the Asian market traders, you know, most likely closing, if they're swinging or whatever, they're closing their positions here, or they're holding their positions into London while their day is closed, right? So they may possibly be going to sleep or whatever. We have that next session to, you know, wipe them out. So when they wake up, they're really unhappy. And then we go into London, and then we have that London close. You know, the sellers from London, they think they're going to be in profits, and then they wake up, next day and they're really unhappy because the New York took out the London. Okay, so each session has its job and purpose. Okay. Type 3, actually missing this slide, but it's just basically the opposite. It's where we take out the high first and then the low and then into the New York POI. Okay. Bearish type 4, same thing, except we're trading into that previous day's New York high first. Okay, so as the range is being built, we have this previous day's New York high being traded into, and then we have that drop below into the previous day's low POI. Okay. Now, when you think about these cascades, I just want you to understand that they melt together. Okay. So for example, if we have a bullish type 1, okay, what are we doing here is we're creating a bearish type 4 schematic down here, right? So let's say this happens at a later time, like around London close. So we have this New York, which the highest probability is going to come around 8:30 to 9:30 NYSE timing, right? So New York Stock Exchange, New York timing, 8:30 to 9:30, you're going to see this being the highest probability, which is going to be around 50 to 70 pips that you can gather from this trade. Okay, if the time starts going further out, towards London close, it's going to be a less amount of pips. Obviously, the market's closing, and typically, the volume is drying up at that time. So around, London close, you'll probably get 20 to 30 pips, which will form your bullish type 4 schematic. Okay, so they will blend together. Okay, so just know those certain things. Okay, and then. So we have something called NRDs and TDs. So NRDs are basically narrow range days, which is typically where you're going to want to stay away from the market. It's just where the market's going to be trading in a very, very tight range, about 20 to 30 pip range. You're not going to catch many moves. And TDs are trend days where you're not going to catch any moves because you should have been in the move already. And it's usually going to happen after a news catalyst, and you're just going to see the market explode to the upside, like offering little to no setups. Okay, so basically it looks like this. You're just gonna see it just constantly going. Okay, and it's not really gonna have any solid POIs. It's just gonna be a trend. And any pullbacks are gonna be very small pullbacks, which are gonna be very hard to get in on. And then it's gonna be, an expansion move. Trend days happen typically after a news catalyst offering almost no entry. Asian will rally or decline quickly, and main position should have been entered on the previous day. Now, when you get those narrow range days, what's typically going to happen is you're going to get this huge expansion, and the next day you're most likely going to get a very narrow range. Okay, after a big news catalyst, you're going to see this move, and then you're going to see a very tight consolidation after. Okay, you want to stay away from that and let the market show its hands. If it wants to go up on the next day, then the intention is bullish. If it wants to go down, then you understand that this is a fake breakout, and you're most likely going to sell short. Okay. Now I'm going to have Ivan take over. He's going to talk about momentum box and how to use it.
Okay. All right. Can you turn the other page?
Yeah.
All right. So basically, momentum boxes. What do we mean by that? By the way, everybody understands Asia range, right? Everybody understands Asia session and the job of Asia session, right?
Yeah.
Everybody understands that. The price usually during London takes either Asia high or Asia low, right? Everybody knows that. It's a common SMC thing that occurs. So price will go for Asia high or Asia low. There is also Asia midline, right? Everybody understands Asia midline. You can see this horizontal red dotted line that's representing Asia midline. Asia midline is basically giving us, Asia midline acts as a support and resistance in a way. You see, price tends to bounce off it for some reason. We don't know why, but price likes to bounce off it for some reason. It's usually giving you rejection. If you see 2-3 strong wick rejection candles on a higher or even lower time frames that bounced from Asia midline, that's a strong sign that price might go the other way. Yeah, we have manipulation boxes in London that start. You see the first blue box. It usually starts around 9. Just a second. Just a second. All right. Basically, the first London manipulation box starts around 9 and finishes around 10, 10:30. I'll show you the indicator we have on TradingView for the timings that you can set those times so you can understand it easier. We have New York momentum box that starts around 14:30, somewhere around 14:30, ends around 16:00 p.m. I'm talking you in Berlin time, by the way. So London and New York, those times are in Berlin. UTC +1 for me. Okay. Asia session is for loads of people find Asia session to be from 10 to 6, from I don't know, from 11 to 7, from 9 even. Some people say it's from 12 to 7. Some people say it's even to 5. We don't really know. They don't really gonna. They're never really gonna tell you the real times of Asia session or London and New York. What we figured out is that London and New York, inside of those momentum boxes where we found those specific times, is where the price likes to give us a strong momentum, a strong rejection or reversal. Okay, it's all about timings. When it comes to timings, it's all about basically clearing liquidity and giving you a strong sign of rejection. That's what we look when we look at the timings. Okay, we can see here the London manipulation box basically took out Asia high, and then after that, everything, even order blocks, lower time frame order blocks, POIs, supply and demand, everything, even valid retail trend lines, everything becomes valid, because after price has taken out something, some session here or some session from previous or weekly open or stuff like that, price tends to create a valid retail trend line. We know this has no logic. So for us, this isn't a good trend line. There is logic to trend lines, but you need to know how to use it. This trend line doesn't make any sense. Why would we use the trend line that didn't clear any liquidity from previous sessions, right? That's why we use the trend lines that are cleared. So even supply and demand, an order flow here would be valid, yeah? Okay, you understand that? Let me just clear this, okay? There is another thing here that's called London close. So job of London close after, of course, New York, London close, it starts at 17:00. Sorry, finishes at 17:00. So London close finishes at 17:00, and his job is to take the New York peak. It's either gonna give you a strong reversal or it's gonna continue taking maybe New York from here. I'll show you more on TradingView. It's easier like that, but it's basically its own job is to take the New York. Every session that starts, its job is to take the previous session, liquidity from previous session, okay? I'll talk about Frankfurt because I don't think we listed it here, but this is basically an example on TradingView. You can see London took out Asia high, everything from there, even small POIs and order blocks will be respected. Maybe this, but every supply and demand is respected after the price cleared the liquidity, right? But not any kind of liquidity. We need to clear the timings liquidity, the session liquidity, right? You understand that? Even here we got reversal because price cleared out Asia low, yeah? Okay, we see a strong momentum during our momentum box times that started at 14:30. You can see a push to the upside. Then we can see London close, London close around this area here, okay? Can you move to the next one?
Yeah.
All right, we have New York momentum box. It's doing similar job as London. If London didn't do its job, basically we have here London taking out high, London here taking out low, price bounced off Asia midline, price breaking the valid, sorry, no longer valid demand levels, going higher, picking up some liquidity probably here, and then we have New York's job to take out the previous session, and that's London's momentum box high here. That's its job, and it will do that in the future. Yeah. We also, oh, this London close is for people, I don't know how many of you work 9 to 5 or whatever, but London close job is just a small reversal. Nothing much, but if you are a scalper, if you're trading M1s or M5s or seconds even, this is a good way to take few pips out of the market, I don't know, after a job or something. Yeah. So there's always opportunities. There is three opportunities during each day. There is London momentum box, New York momentum box, and London close here. Okay. These are the three times we need to understand. Okay. Once we see price taking it out, this is our opportunity. One thing I forgot to mention is New York manipulation hours. New York momentum box basically creates a fake trend line before the real New York. They say that New York starts at 1 p.m. 13:00. That's what they usually say. We don't know it's true. For me personally, it's not really true. They will never tell me that New York starts at 1, because if New York starts at 1, I can always take an opposite trade, and I would probably guess more than 50%, right? So New York, they say start at 1 p.m., which isn't really true. If you notice, if you go on TradingView now, you will notice that 1, nothing really tends to happen. They're just giving you a fake direction, fake trend line, not some, I don't know, small supply and demand. It doesn't hold. We need to wait for price to start around 14:30 and then show us what we need to see. 14:30, 1 to 2, from 1, sorry, let me just clear this. From 1 to 2 p.m., there's nothing going on in the market. Usually, don't hold my words, but nothing is usually happening in the market. From 2 to 2:30, it's so-called gap. Sometimes things happen in that, and you can put on your own 4D indicator, you can mark the gap, but basically, we still don't trade gap. Somewhere around 14:30 is when we need to take a trade. It doesn't have to be exactly 14:30, by the way. It doesn't have to be 9 here or 9:30 exactly. It can always be 9:15, 14:15, 14, and stuff like that. But 1 to 2, usually nothing happens. It's a trap. They will take you out. Okay, so be careful for that. They're building something that isn't real. Okay, we don't wait for that. We need somebody to take that shit out, and then we can build a trend line, okay, or valid supply and demand zone. Yeah, 14:30 p.m. of course. Okay, so we have London momentum box. Same thing. These schematics keep happening all the time. This would probably be our good entry. Maybe it was like this. This maybe, I don't know what's on a lower time frame. Anyways, somewhere around this, we wait to see what price is going to do during momentum box. Again, we have New York momentum box, but this time it didn't take out London's high. This time it's shooting for London's for weekly open. Maybe some London session here, maybe some Asia session from previous 2-3 days. We don't really know, but this is a continuation trade. This is schematic that where New York doesn't take London's high. Okay, it doesn't necessarily have to happen. New York necessarily doesn't have to take this high today. It can be in the future sometime. Okay, I'll show you on TradingView how it works when we zoom out. Then we have London close giving us a reversal. London close is pretty much very accurate. You'll notice if you put any kind of indicator and put it on 17 p.m., you'll notice London close is pretty much accurate. London close tends to take, like I said, New York session peak. Okay. Can you move to the next one?
Yeah.
All right, this is the picture that's basically representing the schematics before. You can see that price tends to bounce from Asia midline, like you probably read on the right, and we have London close around here, giving us a small reversal, but price still continues going down. Okay.
Okay.
Can you go on the next one? Because I want to show them on trading view.
Yeah, you can show them trading view.
All right, it's gonna be easier that way.
Okay, I made you host.
Yes, sir?
Yeah.
All right. All right, everybody can see this, right? You do host now, good, good, good. All right. I can't see your questions, but I hope everybody can see it. Basically, what we have here is 4D timings, and they are representing Asia session from 11 p.m. to 7 a.m. This is Berlin time, so I don't have to repeat it, but basically Berlin time here. So London session from 11 to 7 p.m. Then we have wait, I can't do these annotations like this, it's driving me crazy. Then we have London from 9 a.m. to 10:30. We have New York from 14:30 to 16:00. And then we have London close around 5 p.m. Okay, those times are not set in stones, but you will see if you just follow the timing schematics, they are quite good. One thing I forgot to mention is Frankfurt. I don't know how many of you are familiar with Frankfurt. Loads of people think that London starts immediately after Asia session, which is not really true. What happens after Asia session is, let me mark it like this, clear this, is actually Frankfurt session. And Frankfurt session, its job is to do nothing. Frankfurt doesn't move. It doesn't do anything. Frankfurt is basically dead. Frankfurt is dead from 7 to 8. It doesn't really give you anything. We need to wait. Okay, let's stay here. We need to wait for Frankfurt to finish, and then for London momentum box to take out Frankfurt and Asia session. Frankfurt's high and Asia's high has been taken out. After that, you can all probably see a momentum to the downside. Okay, so a valid trend line would probably be here, right? Sorry, something like this would be better. Okay, so we can see that Frankfurt didn't do anything. Frankfurt is basically a trap. It doesn't do anything. If you were to look for reversal here, you wouldn't take it during Frankfurt session. You need to wait for London momentum box to take out Asia high and to take out Frankfurt. Okay, after that happens, we can look for reversal. There is of course gap, as same with New York, somewhere around 7 to 8 is Frankfurt, and from 8 to 8:39 there is a small gap. It's your choice. Are you going to do anything in those gap moments? I don't really do anything. Yeah, this is a good entry, by the way. I don't do anything during gaps. I wait for 9 or 9:30, even better, and then I look for trade. So just so you know, there are gaps, and I don't take advantage of those gaps because for me they don't really represent much. Okay, so Frankfurt session here from 7 to 8. After Frankfurt session is done and London didn't take high or the low of Frankfurt sessions, in the future New York will probably do it. Somebody has to take this low here. okay? They have to take this low here, okay? They also have to take this, maybe not today, maybe tomorrow, 2 days, 3 days, but Frankfurt's low also has to be taken. After they've taken Frankfurt's low, price can continue moving wherever it wants to move, but they have to clear the liquidity from these sessions, okay? We don't look for, I wouldn't personally look for buys here. Maybe you took it on a lower time frame, I'm not sure. But after Frankfurt is taken, then you can look for buys. So this would be a weird entry here if you were looking for buy here, okay? So you need to know that Frankfurt needs to be taken here. Frankfurt's low needs to be taken. Frankfurt's low and Asia's low has been taken out. Then you can look for reversal. Of course, you can look for reversal when it's only Asia high and Asia low that has been taken out. But me personally, I prefer Frankfurt to be taken out alongside with Asia, okay? When Asia high is taken here, Frankfurt's high and Asia high is here, then maybe somewhere in the future, I don't know where, you can look for reversal depending on our patterns. There is no patterns here, but you can see they have to take this high if they took this low. Like I said, it doesn't have to be today, but it usually is, okay? I'm just showing you examples of Frankfurt's high, Frankfurt's low. Frankfurt's high has been taken out, Frankfurt's low has been taken out. Frankfurt's high, oh, we already went to this, Frankfurt's low. Frankfurt's high, Frankfurt's low, both been taken out here, price giving you a reversal. Price took Frankfurt's low, they showing you a reversal. Why did price? There is no other logical conclusion to this than price taking Frankfurt's high. That's why it reversed. Price taking Frankfurt's low. That's why it reversed. Why would price reverse from this area if not to take liquidity from Frankfurt's volume? Yeah. Okay.
It's basically like a cause and effect. So if Frankfurt's low is taken, then most likely we're going to get the reversal to take out the Frankfurt.
Yeah. We based liquidity on timings, on sessions, you know. Frankfurt's high here has been taken out and Asia's high, then you can look for reversal. It's not really inside of a momentum box, but it's pretty close. Frankfurt's low has been taken out here exactly at 900. That means that you can look for buys around this area after they clear that out, okay? For me personally, best is to wait for Asia low to be taken out with Frankfurt session, but I know some of you are just following Frankfurt and what is going to do during Frankfurt and during London. So maybe you can trade but just based on Frankfurt, and like you can see here, price never took Asia low. Here, if I was to wait this to take Frankfurt's Asia's low, I would never take a trade, okay? So if I based it just on Frankfurt, probably I would get some entry, okay? Then next thing we have is, of course, New York. Let me go back to this week. So New York, what is New York doing? New York, like I said, is first around one, building a fake shape. It's not building anything. It's building, it's basically building a fake trend. It's trend line that doesn't make any sense. Supply and demand, order blocks that don't make any sense on a lower time frame, of course. And then around 1430, like you can see here, exactly 1430, price decided to reverse. Exactly 1430, of course, we have a valid retail trend line here. You can call it a retail, but we have a valid trend line here, and price exactly at 1430 decided to reverse, okay? This would be a beautiful sell if you base that on timings and trend line, okay? Same thing here, 1430, we have a strong buy. At the end of start of, by the way, start of London close and end of New York momentum box, we have another reversal, okay? Price obviously rejected this support and resistance. You can probably wait for a candle to close or wait 2-3 candles to close and find your entry, okay? Okay, I'm just giving you options here. but you can see based on timings, it works quite good. Again, worked out. This, again, same thing, 1430. Why would this bounce at 1430 with such impulse like this? And then 1 to 2, nothing really happened, right? Small volume in the market, they're not really doing anything. Maybe they're building, maybe they're accumulating volume orders. Sorry, I don't really know. Only thing we noticed is that at 1430, it tends to explode to the upside or downside. And you can obviously see that even here, even that day, and this day. 3 days, and it's already working out, okay? Okay, price, not at 1430, but at the end of New York, exploded. 1430, price went down. I don't know what's going on with 1430 over there, why they're doing it, but 1430 tends to give us a strong momentum. Again, you keep seeing, we just keep seeing 1430 momentums. I don't know why it's happening, but 1430 tends to give them some kind of, they push price at 1430 for whatever reason. Same thing here, roughly around 9:30 if you want to be precise, roughly around 9:30, they keep pushing price high. They keep pushing price down, 9 push price up, 9:30, they push price down. I don't know why, okay? 9 pushing price higher, okay? Nothing happened here. Price closed at 60, and New York closed, New York momentum box ended at 16, price goes up. By the way, New York doesn't end at 16, okay? Price going up, price going down, 9:30. Same thing here, 9:30, price going down. 14:30, price going up. Just based on timings, if you can understand by now, you can literally buy at, sell at 9:30, you can buy at 2:30, and you would be all right, okay? Wait for candle to close, 2:30 is this candle, wait for this one to close, 2:30, and you're kind of safe. If you want to base that just on timings, I wouldn't recommend, but you can see it works out most of the days. I would say probably around 60-70% of the time it works out. Maybe not 80%, but 60-70% of the time it works out, okay? I don't know what this is gonna do, but if logic is accurate, it's probably gonna give us a momentum. We don't know, okay? We need to wait for a setup, but you can see 14:30, 14:30, 14:30. Last week, Friday and Thursday and Wednesday, all good entries based on timings. London closed, like I already said, London closed somewhere around 17. Price tends to go up. It doesn't have to be necessarily 17. Same thing with this. It doesn't necessarily have to be 9 to 10:30. You see here, if we go further, 11 was the time when they pushed price down. Somewhere around 11 was the time when they pushed price down. So this momentum box wouldn't be that accurate. Maybe if you bought here, okay, but it wouldn't be that accurate. This would be very, very accurate. You see the peak of London momentum box was somewhere around 9:45. This would be a good example of rejection candles standing next to each other. This is so-called crown. When they look, when wicks are representing a crown, that's a sign of rejection. Price is going down, okay? Sorry, there you go. Yeah, that would be a good entry there, okay? Another thing I forgot to say is, and I wanted to mention is, basically momentum boxes in the future usually represent a future POI, okay? So momentum box from New York is representing a future POI, in this case, New York again, okay? In this case, New York again. It's basically a valid supply and demand. Momentum boxes are valid supply and demand, okay? This is where they put most of the volume in price. This is where they decided to push price up. I don't know if they're taking anyone out or whatever. For me personally, I think they're just clearing out sessions from before. It's like you can see here. Why would they reverse exactly here? I don't know if anybody had stop losses here or whatever, pending orders, I don't know, whatever. Basically, price just reversed because it took Asia high. After that, you can see, of course, a reversal. That's it. It doesn't have to be complicated. It's just based on sessions. Take it out, take it out. Price will reverse, price will reverse. Okay, you got exact timings, 14:30 here, price reversed. If you're wondering which order block, not order block, sorry, we don't use order blocks, which supply and demand is valid, wait for price to take out, for London to take out Frankfurt and Asia low in this case, draw that trend line, and you will have 2-3 touches that are good valid entries. Okay, it doesn't have to be complicated. Just based on timings, it gives you quite good results. Okay, same thing here. You can sell at 14:30, and at the end of New York, you can probably buy. There's Ev showing you good entries. Yeah, that's it. Okay, so future POIs are usually hidden inside of momentum boxes. Not necessarily. Sometimes depends what it is. If it's in New York to New York, that's kind of all right for me. If it's like something like this, New York, even though this already tapped to New York, this is kind of all right for me to look for reversal. But if it's London to New York, it's kind of tricky. I wouldn't really take it. It's based on your own backtesting, but you will notice that London momentum boxes will show you London entries. London momentum box here is giving me London session here. This momentum box probably wasn't that accurate. This was more accurate. Okay, you can see they tend to work out quite good. That's not always. Tends to work out quite good, but not always. Okay, so you need to backtest this a lot, but just based on timings, there is loads of success to be done here. Loads of trades to be taken out just based on those session on session timing. Okay, we have London momentum box tapping into London momentum box, a strong sign of push to the upside. Okay,
You want to go
they
over
are future to go up.
daily opens?
Yeah, daily opens. Okay, so one thing I wanted to mention is if you go on a higher time frame, your take profit, if you are swing trader, base your take profits on Asia sessions that haven't been taken out. Okay, Asia session that haven't been taken out, Asia session that haven't been taken out needs to be taken out. It doesn't have to be tomorrow. It doesn't have to be that same day, but maybe in 10 years, that Asia session that hasn't been taken out has to be cleared. Okay, so this is where you can base your take profits on. This is liquidity. This is why they are going. This isn't liquidity. This shit, people market like this. This is liquidity. And I don't know why they market like this. Why would this be liquidity? I mean, it doesn't make any sense. Why? Because it's trend line. And then trend line obviously seems to be working. So why would that be liquidity? It doesn't make any sense. Asia session, Frankfurt session that's left uncleared, New York session that has left uncleared. They all have to be taken out eventually in the future. And I'll show you what we mean by daily open, because it's pretty much the same. Wait, let me just find the daily open indicator. There it is. All right, let me go lower time frame. Daily open is the same thing. Daily open has to be cleared out. You can see, where's my annotations? All right, daily open for whatever reason here was cleared out by few pips, price tends to reverse. Why would that happen? Why would they clear out daily open here, and a price giving you a reversal? Why? It's just based on those timings, nothing else. It's not based on, I don't know what people say, this is liquidity here or whatever. It's just based on daily opens, session timings, okay? 9:39 works quite beautiful. 14:30 works quite beautiful. Let me show you a few more examples of daily open. Of course, daily open doesn't work all the time, but for me, it's quite accurate. Daily open inside of New York momentum box. Maybe you're looking for reversal. I'll tell you this is a good sign of reversal. Very good. Okay. Daily open kind of hasn't been cleared. It has been cleared and didn't, but still a sign of reversal. Okay. Clear. daily open here, giving you a strong sign of reversal. Sorry, it actually has been cleared here. Okay, you can all see that daily open has been cleared, price tends to reverse. Daily open has been cleared here, price tends to reverse. This is daily open and Asia high being cleared, price will give you a reversal. Daily open, they took out Frankfurt low, they took up daily open, price reversed. Okay. Let me go on a higher time frame. Daily open over there. You can see it easier here, like this. I don't take this, by the way. If daily open goes to almost another day, close to London close and close to New York close, you can still trade based on it, but I wouldn't recommend it. But you can still see, based on daily opens, sorry, here, based on daily opens, price gives you a strong reversal. Why would price give me a strong reversal over here, if not, by my logic, daily open? Okay, daily open reversals. Daily open reversals are really strong, and I'll show you. That's my favorite out of this. Daily open, yesterday's high, yesterday's low, but you can still use yesterday's high, yesterday's low. They're not that bad. Just a second, let me set up the colors. All right, this is another thing. Yesterday's highs, yesterday's low act similar as daily open, except they don't tend to happen that often. Daily, yesterday's high, yesterday's low have been taken out here. Yesterday's low in this case, price tends to give you a reversal. Every time price clears out yesterday's high or yesterday's low, maybe you should watch out for reversal. It cleared it out here, maybe you should watch out for reversal. It depends, really depends on the setup, but you will still see that price, if it clears it out here, it will show you a reversal. If it clears it out, or maybe even here, it will give you a reversal. Like I said, timings are based on reversals and understanding continuation trades. Okay, you need to see what London and New York is, what kind of price action is showing you. Okay, is it impulsive? Is it very weak? Is it ascending, descending channel and stuff like that? You need to understand price action first of all if you want to be a trader, right? So read candlesticks, try to read candlesticks, but add timings to that and you will have good results, definitely. Okay, weekly and yesterday's high and yesterday's low tend to work out. They don't often, they don't happen that often. You can see here, cleared it out, price went up, price cleared it out, went up, cleared it up, went up. I do prefer, just to tell you guys, I do prefer when it clears it just by few pips, like this, instead of this. This is very tricky. You see this, cleared it out, still went up, but where you're gonna enter here, it's very tricky. This is much better entry. Even just by looking at this and drawing some POI, order block, supply and demand, you can take this trade. You can understand that just based on this, valid supply trend, valid trend line is good to take it from third touch, fourth touch. Even after that, I wouldn't take it. But you can, but you can see, yeah, here, amazing entry. Just based by looking at it like this, adding yesterday's high, yesterday's low indicator, yesterday's high, yesterday's low indicator, taken out here, taken out here. Okay, when it's by few pips, it's much better than when they go really impossibly outside of yesterday's high, yesterday's low. It kind of acts, if you want to look at it in that way, as Bollinger Bands. It kind of, not really, but very similar. For me personally, daily opens much stronger confirmation. That's up to you guys what you want to use, but everything I tell you right now, it's quite good on intraday basis on scalping. All right, if we are compounding that account, that small account, definitely full margin when you see Frankfurt taken out, when Frankfurt is taken out here and Asia low has been taken out here, if you have your setup, your favorite setup on the compounding account, you can definitely take that push to the upside. Take those 50, 100 pips and get out, okay? Just be careful. By the way, if you see London close approaching, be careful. that reversal might happen on a lower time frame. If you're trading M1 seconds time frame, 5 minutes, just be careful that it's usually a weak sign of reversal. So don't get out of the trade if you see London close giving you a reversal. For example, here, if you saw London close giving you a reversal, of course you can take a reversal, but there is no need to exit this trade just because London close gave you a reversal. Okay, those are all things you need to study or backtest. Basically, it's just backtesting this. Okay, just backtesting sessions. And I'll show you with 4D indicator, you can trade just timings with 4D indicator and you will have good results. Okay, very good results just based on timings and indicator, because indicator is also showing us future POIs, and if momentum box is showing us future POIs, that's a good sign of taking that POI or supply and demand and drawing whatever you want to draw. Okay, whatever pattern you find as your favorite one and taking the trade. Okay.
Yeah, and again, like you guys don't want to be trying to ping pong shit until, like I said, until you have like a very high awareness of things. I would stick to higher time frame until you master that, because as you start dipping down to the lower time frames, your awareness of the higher time frames have to be there. So if if you're trading on M1, you need to know what's going on M5, M15, M30, H1, H4, daily, weekly, monthly. Everything needs to make sense for you to trade that way. So if you like the headache, then go ahead.
When you look at the probability games, if you were to take this trade and sell it here full margin, it's much better than trying to sell here, buy here, and stuff like that. Maybe you would buy somewhere around this area, take a loss. Maybe you would buy somewhere around this area, take a loss. And again, you would probably buy, if you were a ping pong trader, you would probably buy it for 0.25 risk or 0.5 risk. If you are a ping pong trader, I don't think they're risking 1 to 2% on ping pongs, because they know they take loads of losses. They even have those 3 losses rule, right? 3 losses in a day, and they're out for that day. We don't do that. There's one trade you wait, you go full margin. I would always rather go full margin than trying to sell here, trying to buy here, and so on and so on. It's better to go full margin, take that one trade, get your 20%, 30% of your account, even more, instead of 0.25, 1 to 5, 10, or whatever. It's a different mindset. We don't do that shit. Okay.
It's not that, it's not that you can't do it. It's just not recommended.
Yeah,
it's highly possible to ping pong everything, but it's just like you're gonna exhaust yourself and you're gonna have a lot of mental bandwidth wasted.
Yeah, like last week I took literally 4 trades. That was my entire week, 4 trades, full margin, and that's it. You're done. You don't need to know ping pong shit or whatever they do. I don't know. Maybe in 2 years it's gonna be some new stuff, whatever. But
right,
there is no need. Just keep it simple, stupid. Go full margin here if you understand everything we just told you about sessions. If you understand timings, if you understand patterns, if you understand valid trend lines, if you understand indicator, you can take it easily.
Yeah, and also it's like you have 3 sessions, or 4, 5 sessions, but like 3 main sessions. You have Asian, you have London, and you have New York. So if you're taking more than 3 losses in a day, you're doing it wrong. Like if you're just trying to play this whole entire thing, like you're doing it wrong, because you can catch one trade in Asian session, which is still going to probably be a low pip count. So your goal is to catch either the higher low of day in the London session, right? So the higher low of the current day in the London session, and then the higher low of the current day in the New York session. Okay, so if you're taking more than 3 trades in a day, you're absolutely doing it wrong, because you're going to be taking a loss in the middle of the ranges. Okay, so you have to understand that you probably missed the trade, and you're probably not going to get a good entry anymore. So you just got to move on to the next day. Don't be married to like you're being addicted to the trades at that point. You're just trying to get into something.
Yeah, that's why we even say 3 touches on trend line. You don't want to go 4 touch. We're just trying to reduce, we're trying to boost up win rate, you know? You want high win rate. Who wants lower win rate? Who wants taking every order blocks and saying they are ping pong traders because 2 of them and worked out, but 20 failed? Who wants that, right? You say 3 touches, you're out. If it's based on sessions, timings, indicators, patterns, that's all you need. We are here to make money, not to look like some kind of cool SMC trader or whatever.
If you can make me host, I'm just gonna go over
Yeah.
the daily cycles and pairing them.
I always I always feel like I'm mad on SMC traders, but I'm not. Wait, let me find you. Can't see you. Oh, okay. There you go.
Okay. Okay, everybody can see my screen, right?
Yeah.
Okay.
Yeah.
Cool. Oops. What the fuck did I just do? Okay, so I want to go over weekly cycle. So basically, if any of you have studied ICT, you should probably know the weekly cycle, but there's a lot of you who probably don't know it. Weekly cycle is a thing that we've adopted from ICT. It's not. I don't know if he invented the weekly cycle. I think it's been a thing for a long time, but it does have some merit to it. So typically, you're gonna get Monday, Tuesday high of the week, and then you're gonna get your Wednesday, Thursday midweek reversal, and then your Thursday, Friday continuation or pullback for the next week. Okay, so when this happens, right, when we want to identify it, we have to be aware of what's going on. So let's say, for example, we're on Tuesday or Wednesday, right? We understand that during Tuesday or Wednesday, we're most likely going to get a reversal to the upside, right? It's going to have that midweek reversal. So if we look at this, we have to understand at the same time when we're looking at our schematics, right? Like anytime you label a POI, right? So when we were looking at, let's just say a bearish type 1 schematic where it looks bullish and then we get that drop off, right, into a POI to the left, for example, like this, okay? And this is going to be like your New York timing. Okay. We have to understand that we have to anticipate where that higher low is going to be made. Is that higher low going to be most likely made at some random point, or is it going to be made towards some other POI to the left, some other setup to the left? Okay. So when we see a setup to the left, we have to understand that that is possibly going to be the high of the day. Okay. So that's why we're able to take a sell. Now we can validate the sell, you know, with lower time frame stuff. I don't really do too much lower time frame stuff like that anymore. But what I'm saying is we have to anticipate where that lower high of the day is going to be. So for example, if we have this Wednesday, right? So this is intraday, right? Intraday, we understand where the higher low of the day is going to possibly be made. But now we have to understand where the high or low of the week is going to be made, right? So if we see this happening, right? And then we have a bullish market, right? We have a bullish market where we're trying to go higher. We have this hidden bearish move. We have this bullish move hidden inside a bearish move. And then we see on a lower time frame, right? Because this is our week, right? This is our weekly price action. And then let's say we have that Asian session low, that London session low into that New York session low, right? So now we're pinpointing on the daily basis and on the weekly basis. Let me make this red. Okay, so red's for intraday, black is obviously for the weekly. Okay, we have that type 1 schematic into that Wednesday low of the week so that we can have an actual really high probability of an explosive move to the upside. Okay. Does that make sense, guys? I don't see the chat box.
Yes. Yes.
Okay, cool. So when we're pairing these things, right, when we're looking at this, and then we're also looking at obviously our setup models. Our setups are basically models to enter the market. This is all giving us the awareness of what's going on in the background, because a lot of us are just focused on what's happening inside each one of these without looking at everything going on, okay? That looking at everything going on the higher time frames down to the lower time frames it's really hard if you're just going to be focused on a certain area like this without paying attention to the timings, without paying attention to the weekly and daily cycle, intraday cycles. You want to be able to understand like, okay, today's Monday, so I'm possibly going to get my high or low of the week. Okay. And then once Wednesday happens, then you understand like, okay, I'm possibly going to make my low or high of the week. Okay. Now everything else will be continuation plays, right? So if we have that Monday high being made and then Tuesday forms some sort of lower high like this, we understand that we should probably be looking for sells on that Tuesday down into that Wednesday. And then let's say we get a breakout on that Wednesday, we can wait for that pullback on Thursday to get into the market, right? And this would be some sort of SNR model that we'll talk about tomorrow. There's specific rules. It's not just break and retest, okay? There's specific rules and criteria that goes into break and retest strategy, or it may just go into something like this, right? So you have your QM down here, low, high, lower, low, higher, high, return, and you have this entry. But let's say we just get that SNR type 1 that we will talk about, and then we have this valid trend lining going on here, and maybe there's a QM level in here, and you catch that next continuation on Friday, and you can hold it into that next week, okay? So once you understand all the timings and the patterns and the schematics to understand what the market is most likely going to do next, it gives you a better entry criteria where you can feel very safe to go full margin on these trades, or very high, like for example, like 20% of your account. 30% of your account, you can go into these trades with a high level of confidence because you understand the probabilities of that Wednesday low of the week, that you have that type 1 schematic, that you have bullish structure, that you have your setups, you have your trend lining, maybe you have your indicators going on in the background, maybe you have your Frankfurt sessions stop hunted, maybe you have your daily open stop hunted. It all depends on all the confluences that you're using to put together a good trade, okay? So I just wanted to go over that scenario, like in case you guys were kind of wondering, like, if I'm a swing trader, how do I catch the weekly low? And that's exactly how you would do it. So if you're swing trading, which means you're holding the trade for 1-2 days or more, even up to a week to a month, it depends. I would say a month is more of a position stance, but this is how you would do it, okay? So right now we're going to take questions. If anybody has questions, we'll go ahead and go over that. Where is my, oh, here it is. Where is my chat box?
Yeah, guys, shoot any questions. If you have any questions, shoot it right now. If you have questions about timings, if you have questions about daily opens, weekly schematics, anything. Yeah, the times for Asia session, but there is basically a PDF in the group. You will see it's called 4D timings, I believe, and it's a small Word document actually that you have all the times written down.
The PDFs will be sent after tomorrow's session.
Yeah, just keep in mind that I was talking about Berlin time, not UK time, Berlin time, when I was talking about timings, okay? 11 to 7, yeah. You got Asian, you got 4D indicator on TradingView, and it's somewhere in the group. Just go under files and find 4D indicator, 4D indicator and 4D timings. And you can set up times and color it the way you want. You can even mark up the gaps, Frankfurt sessions, New York closes, all those stuff, Asia midline, I believe. So you can. There's loads of options there, but I like to keep it clean, and I think it's the best way just to have Asia and 2 momentum boxes, and maybe London close. If you're working 9 to 5, it will help you get some pips and during after work. Okay, just make it easy to read. Yeah, they were done by indicator. Yeah, not manually.
Yeah.
So, for the indicator, we'll talk about that tomorrow, right, Ev?
Yeah. It's, 40 indicator is more of an entry setup. So we have tomorrow is all about entries and confirmations with
Yeah,
confirmation.
so basically, even times and everything, like I said, times are not set in stone. It's not 9. It's maybe 9:20, 9:22, 9:30. It doesn't have to be 9. It can be 8:45. Sometimes it's during those gaps. That's for you to notice what you find, what you see will, I mean, what you backtest maybe works good for you 9:30, maybe 9. I'm just giving you exactly 1 hour and 30 in London and 1 hour and 30 in New York, during New York, and I'm giving you London close. That is, and its job, and I'm showing you the jobs of sessions and what they have to do in this day or tomorrow or next week. I'm showing you what daily open and yesterday's high have to do, okay? But this is just confirmations. We trade setups, we trade patterns, but this is just confirmation. Timings are confirmation. As same thing it goes with indicator. It's a confirmation. Okay, you can most definitely trade just based on indicator and timings, but with pattern it's much easier, understandable, more logical, and its win rate is off the charts if you trade just patterns with timings. It's crazy.
Yeah,
Okay.
it's totally normal to feel confused. It's your first day, so I mean
Yeah.
your second day, and it's a lot of information. So this video, you're gonna have to definitely go back and study this video and ask a lot of questions in the group. That's where you're gonna find the most help.
Yeah.
So yeah, you're definitely gonna feel confused, 100%. I would say for 2 months you're gonna be confused. So you just got to stick it out for 2 months. Like I said before, tomorrow you're gonna get the setup models. So each setup, you're gonna be required to screenshot that setup 100 times. So each setup 100 times, you need to screenshot it so it's ingrained into your brain. When you see it, you should be able to glance at a chart within 30 seconds or less and find if there's a setup or something that you need to be taken. And then after that, you're going to be looking at the timings and make sure that everything is lining up properly after you found your setup. Okay. And then the confirmations. Price comes into my POI around 13:30 GMT. News New York. Would you be that okay, or do we not trade news like CPI Fed news? I don't really care about the news. I mean, I pay attention to the news,
Really? Yeah.
but if there's a valid setup, then I'm taking
If
it.
there is a setup, take it. It's probably going to work out because setup is pretty strong. But like I said, sometimes trades are not in those times, and I will still take a trade. I'm just giving you a higher probability is inside of those momentum boxes. As you can see, during momentum boxes, they're pushing the price. For some reason, they're pushing price around those times. We don't know why, but they're pushing it during 9:30. 14:30, like I showed you, 3 days out of those 4 days, 3 days last week, Wednesday, Thursday, and Friday, 14:30 was amazing time to take the trade. Just taking reversals on 14:30 during your backtest, and you will see it's already good results. Okay. Yeah, within the box, but it doesn't necessarily have to be within the box. And yeah, 4D indicator is in the group. There is also 4D indicator for CTrader and MT4, MetaTrader 4. So you can use those things if you want to analyze on that. I use CTrader instead of TradingView because I find it easier. But you can also use TradingView. It's still there somewhere under files. There should be loads of documents under files for the Word timings in Word and indicators. You just need to, for the timing, I think you need to add it to Pine editor on TradingView. And I hope you all understand how to do that. There's a Pine editor right there at the bottom where you can see next to text notes.
Yeah. So like when you when you're trading, like when you're doing a compound challenge, like when you're really trying to grow your account quickly, I wouldn't say quickly, but at a very like good rate. It also depends on the market conditions, right? So we don't want to see like markets trending like this to be able to compound. When this happens, it's very hard to find good setups. So when something is happening like this, you really want to use those timings. Okay. When the market's trading sideways, it's a lot easier to compound. And I'm literally, when I'm compounding, I'm taking, so when you're compounding, you want to take the best possible setups, right? So you want all the confluences to line up, and you want to be able, like in the first video, first sessions that we had, those 10 trades or those 30 trades, however far you're trying to take it, you really need everything to line up, okay? Because you want 10 really, really good trades in a row. And if you don't get them in a row, you obviously, take a day back and you go, according to the plan. Especially with full margin, you want like the highest quality setup. When you have a market trending like this, you also want that very high quality setup, but this isn't going to be something that you're going to really be compounding. So you may not get your timings correctly in here. A setup might not occur because we have so much expansion to the upside. So during market conditions like this, timings is probably going to be off. But when you have something going on in a sideways actions, timing is going to be necessary, especially if you are wanting to compound your account. Okay. So basically, tomorrow when we go over setups, it's basically I'm taking setups to setups, aiming for around 50 to 100 pips per move. Sometimes more, sometimes less. It depends on what the market's offering. But if it's offering me something, then I'm taking it and I'm closing it out at logical areas without. I'm not worrying about like a whole entire move. Like I'm not trying to catch this top, right? Like some people can hold this top all the way down, but they're not holding a full position. Okay. They'll probably, take some profit here, because you don't know that it's going to take out this low. Nobody in the world knows if it's going to take this low out. Okay. So you have to be able to suck it up and be like, okay, I made money. I made my profit target. I hit setup to setup. I'm good. I'm not worried about catching this entire length. Now, if you're swing trading, it's a little different because that's your strategy, right? You're focused on your rules. So if you are a swing trader, you're going to have to understand that you're going to have the patience to hold the trade. So patience goes both ways: patience for waiting for a setup and patience for waiting for your TP. Because you could have this whole entire move and then price can bounce and then come right back up to your entry and you're freaking out and you don't have the balls to hold it. You'll exit your position and then it'll come back down. Okay. So just understand your specific type of trading. So if you're a scalper, swing trader, intraday trader, you have to understand what comes with that. Okay. Swing trading comes with ease because you have an easier life. You're not focused on the chart so much. But then you also have that scare if it comes back to your entry and you've been holding for a week, it's going to suck. As far as intraday, you have your intraday setups, but then you also you're leaving money on the table if it does come lower, but you're also protecting your losses because you can easily take a loss on an intraday basis. Okay. So it all depends on what is suitable for your mindset. Okay. So if you feel a lot more comfortable swing trading, Ivan's a swing trader, right? He swings. I'm more of an intraday, I would say like a partially swing trader. It's not really swing trading, like, cause I hold it for like maybe a day or two, but more than that, I don't hold it for that long. So it just really depends on your ability to withstand certain things. Okay. Any more questions, guys? We're falling like crazy and gold went flying in out of everyone. I seen Evan catch the buy and I was trying to figure out how did he catch it, if you do remember. No, I don't remember. I've taken so many trades over the years.
You got any questions, guys, before we wrap it up? Do you understand what we were trying to say?
Do you remember where the buy was? Like what date?
What pair? Oh, gold.
It was probably using smart money concepts back then. I don't really use, like, we still use some of the smart money, just mostly like timing stuff is what we use from smart money. And a little bit of the liquidity, but right now I just trade setups. Like all these in here
I'm
are all
not saying
setups.
smart money is shit, but it kind of is.
Yeah. Smart money, yeah, it's just low win rates. All that on your chart, we're gonna go over tomorrow. Yeah,
Yeah.
I'm gonna go over setups, and how to apply it, and which like how these are setups that have happened. Some of these we've taken, some of these we signaled to our group for the compounding. So, I think we're on the compounding, we're like 90% win rate or something right now, and
Right.
that's for like the group signals.
So it's not just we say, and that it's not just we giving the logic, we're actually doing it.
Compounding group, it started on January 5th. Basically, everybody started off with like, I don't know, I started with 500.
Yeah.
We had other people start with smaller amounts, and some people have grown their account like by 500% or some shit like that, right?
Yeah.
Yeah.
Even more. Some of them.
Yeah. So basically, I mark entries, and you can choose to take them or not, and compound your account with from a very small amount to a lot more.
Yeah.
Right now, it's just been a little stressful because this market, I think when we started compounding was back down here.
I mean, 2
Yeah.
weeks ago, right? Or a week ago.
Yeah, like down here, January 6th, I believe we started. And it's just, the
Yeah.
market's just not been giving a lot of entries. It's just been going up.
We're
I
gonna
don't
wait
know.
for a side move.
Yeah.
Just patience is like 90%, 90% of trading. Just sit there and I don't know, watch Netflix until something happens.
November 10th. Let's see. Very curious. Oh,
Stop.
okay. I think it was down here. This sell up here or the buy. Oh, I think it was the
And
buy.
there's someone.
Yeah. I remember this. It was November 10th.
Here,
I think it was in here. Yeah, it was in here. Let's look. I think this was just a QM with timing.
if you want to do compounding, just start with, you'll see a compounding plan in the group and download it, and you can do compounding with us. We'll see. We'll need to wait for gold to develop a bit more, but you can do it with us. A lot of students went on their own and started compounding their own accounts, $50 accounts, $100 accounts, and they are already more than 5K in profit.
Yeah, it was this
Quite good.
setup. So we had a low, we had a high, lower low, higher high, and I just took the trade from here with the timings. So I remember this setup. Yeah. So we had this, and then I had this timing here. So London close timing ish, or New York timing. Sorry, New York timing. So at New York, because at that time I was trading a lot in New York, and we had this QM level here, and then I just took the buy as the news came out, price dropped, I bought, and then flew. Then I also sold all the shit that happened after. So I sold where did I sell? I sold somewhere up in here. I forgot where, but I sold a lot in here. I think I bought down here somewhere, and yeah, it did hit. It's literally it came down, and it flew. It was a dope ass trade. I remember that. I thought it was like a year ago you were talking about or something. Any more questions, guys? Tomorrow should be fun.
Yeah. Tomorrow, same time, by the way. So it's the same time.
Yeah.
There, you can use 4D or you can use kill zones, 4D timings, or you can use kill zones. ICTV class. We have info on that in the group as well.
No, a lot of people haven't signed NDAs, so we don't post a lot of the stuff in there. Most of the people, like if you want the recorded videos, you'd have to sign an NDA, which I think most of you have. So when those recordings are ready, you'll be sent those recordings and you'll be sent the PDFs on this entire thing. Where do we get the MT4 indicators? Do we have MT4 indicators, Ivan?
Yeah, we have MT4, C-Trader, and TradingView indicators. We don't have MT5, I believe, but they are all in the group. And there is 4D indicator and there's 4D timings, two different things. 4D indicator, I'll show you tomorrow what's about. It has 4 different setups, and timings is 4D timings basically. Okay, it's 2 different things, but everything is in the group. Just go under files, you'll find it. For me personally, I use Raw on IC Markets, and I use Razor on Pepperstone.
And I
But
use
Pepperstone doesn't have big leverage. Sorry, use the big leverage brokers, 1 to 500 or more. I don't know if you mentioned that.
yeah, you got to use 1 to 500 if you're trying to compound at least. I use Prosperity FX because I'm from the US, so I can't. There's no regulated brokers that have more leverage than that. So I use Prosperity. I've heard good things about Prosperity, and I think the other one is COT. I don't know. I heard somebody talk about COT. I think one of my buddies, Bill Catches Pips. I don't know if you guys heard of him. He uses COT, and he gets paid out. So yeah, COT Forex. All right. Any last questions, guys, before I wrap this up? If you think of them after, just ask them in the group, and then
Yeah.
I'll give it to you guys.
All right, guys. See you tomorrow.
All right. See you guys.
See you.